The force surrounds us and penetrates us. It binds the galaxy together. You must unlearn what you have learned. Every aspect of your life is impacted by taxes, whether you know it or not. This podcast will educate you and also uneducate you. The latest clickbait tax trend. Is it accurate? This is a podcast for regular people. It may be hosted by a CPA and certified financial planner, but it's not for us. Instead, this is a chance to tell you a story about how I use tax law, yes, tax law, to save a couple's marriage, or the time financial planning prevented the estrangement of a father and his daughter. I'm Cecily Welch. As the accountant you can understand, I help people navigate and understand the one thing that impacts every financial aspect of your life, taxes. This is the Tax Translator Podcast. Aisha, welcome to the Tax Translator Podcast, where taxes speak human. This is our pilot episode. I can't tell you how excited I am to have you here. And you may not know this, but there's a specific reason why I asked you to join. Based on several of our historical conversations, it really highlighted how necessary it is to talk to people in English about what impacts their everyday life. Mm-hmm. So let me just give a little intro about what the podcast is and what it isn't.
Okay.
And then I also want you to give us a little bit about who you are and what you do.
Okay.
I'm Cecily Welch, the accountant you can understand. And you've heard me say it before, I care about people, the world cares about money, so I figure the more people who know about money, the better the world will be. You and I have known each other for...
Long time.
A long time.
Yeah.
About 35 years we've known each other.
Sounds about right.
You've been a client for about 20.
Mm-hmm.
And in that time, we know people who follow Dave Ramsey for budgeting, Susie Orman for investments, and you've been in the rooms when I've been on the soapbox going, all of these things, anything that you are dealing with financially, if you're ignoring taxes, you're doing it at your peril. And it drives me bananas, as you know. And when we've had conversations about what's working, what isn't working, why isn't it working, why isn't it working the way I want it to work, it really got me thinking about these normal conversations that should be happening with someone's professional advisor instead of friends.
Right.
And so it really got me excited to talk about real money, real life, real taxes, and what's going on versus, well, here's the PowerPoint and here's the calculations. It's not quite as meaningful.
No, not at all.
So
yeah.
I appreciate your being willing to share some of the intimate details that might feel like, oh, I don't believe you're asking me to talk about this. Because I want everyone to know we all need to talk about this because we're all, life is lifing and sometimes the math doesn't math.
That's right.
So talk to us about your 30 years. So you've transitioned with different companies.
Yes.
But I keep calling you're that distribution supply chain stuff.
Yes.
But I know I oversimplify.
Yes.
So what do you actually do?
What do I actually do? Awesome. Well, first of all, thank you for having me on your inaugural podcast. This is my first podcast, so I'm excited to do this with you and be your guinea pig. But yes, I have worked in supply chain for about 30 years, and so supply chain has ebbed and flowed in terms of, what it means and the terms or what have you. But essentially, supply chain, if you think about a good or a product, it's all the activities that happen, all the way from sourcing and procurement of raw materials for that product, all the way through the manufacturing process, through the distribution process, transportation, and ultimately getting it to the end consumer. And so my specialty is really in demand planning, forecasting, warehouse management, transportation, the kind of the tail end of the supply chain.
So once the sales folks and marketing folks figure out that we all have suddenly decided that we love, I'm a Detroiter, that we all love rock and ride, that's a very tasty soda that is just filled with sugar and not good for me. But once they figured out, hey, we're going to need this at this place for this event, which is going to have
20,000 people, you kind of got to get it there on time.
Yeah, but there's a lot that goes into that. You know, and
oversimplifying.
Even taking that into, if you want it available at your grocery store, right? There's demand planning, that's forecasting, that's looking at sales history, looking at how much is typically been sold at different outlets, and backing that up backwards to try to predict how much do we need to produce of the rock and rye. How do we source the products for the rock and rye, and making sure that all of those things are available in the supply chain pipeline. So when you're ready and you go to your local grocery store and you want to pick up rock and rye, it's available to you, and the shelves aren't empty. So, yes.
And so many different companies have to deal with this that we haven't even thought of.
Oh,
so I know we've known each other for a while. So you've been in these types of roles, and then eventually leadership roles and executives at General Mills, Georgia Pacific, Coca-Cola, and you're currently an executive at Chick-fil-A.
That's correct.
And all of these have these types of distribution and process and product movement things that you have to manage.
Yes.
And
Literally any industry that has a product that they sell to a consumer, whether it's commercial or a just a consumer product, every single one of those companies has a supply chain.
And so as you've been moving and progressing in your career, getting where you want to go, having the dream path.
Yes.
I suspect there have been multiple, retirement plans, benefits, 401ks that you've had to manage. What do I do next?
Correct.
Do I roll it over? Do I what was your thought process when you were moving and changing careers? Did you even think of those things, or was it me going, hey, what are you going to do?
Yeah.
What was
Yeah, I would say definitely when I started my career, I was 12. No, I'm just joking. I was actually very young. I was in my early to mid-20s. But my first career, my first company, I was with General Mills. And, I'm literally 23, 24 years old at that point. And, no one had told me about 401k plans and how to think about your retirement. And so all I knew was that the company offered a 401k contribution. For the first couple of years, I didn't do it because I really didn't understand what it was, right? And so as I kind of educated myself, I started contributing to the plan, but not really, at that age, you're not really thinking long-term about, retirement because you feel like it's so far away. It wasn't until I left General Mills. I was there for almost 10 years, and I transitioned to move to Atlanta and started at Georgia Pacific. That's when I started to better understand what was involved with retirement planning. It was my first time that I actually had to think about what do I do with my 401k from General Mills, because I changed organizations, changed companies, and didn't really know what the options were. So luckily, I kind of knew somebody who was an accountant, who was a friend of mine that I could kind of call. And so actually you helped me out tremendously in just thinking through, well, what do I do?
Did General Mills give you guidance that you just were like, I'm not sure what they're telling me, whatever, let me ask somebody? Or did they assume that you already knew?
There was some guidance. I mean, typically, in any corporate company, when you start with the organization, they give you your benefits package. They kind of give you some literature to tell you like what's included, and but it didn't go much deeper than that. So I wasn't really fully educated at the time, and it wasn't until I progressed further on in my career that I really started to change organizations that I started to understand more about the importance of retirement planning, the role of a 401k, and really understanding what's the difference between a Roth IRA and a regular IRA.
Oh my gosh.
And investments, and so.
And they didn't even exist then.
And they didn't exist then. So, I would say probably for the first 10 to 15 years of my career, I was just putting money away, but not really thinking about it proactively around having a strategy.
I'm just so excited that you were putting money away.
Yeah.
Because I think sometimes we get so caught up and we should know and understand 100% of what's going on in our finances. And I'll be honest, I started contributing to my 401k, my first job, because my father said, contribute to your 401k. It's like, what are you talking about? Shut up, just do it anyway. Okay.
Yeah.
And I think sometimes there's value in having a resource somewhere. So just, you'll understand that in a minute. Do you remember statistics from grad school?
Oh, gosh.
Oh, my God. I know that I'm a numbers person.
Yes.
Me and statistics did not get along.
Yeah, we barely made it myself.
But I remember that professor stating, trust me, the first 2 months, you are listening to a foreign language. You have no idea what's going on. But one morning, you'll wake up and it'll click. I think there's some aspects about taxes, about retirement, that's the case. If you have someone that you trust that just says, please, just do it. I'll explain it later. Just do it.
Yes. And I think it's also, when I think about how I grew up, my parents divorced when I was very young. And my mother was very spendthrift. I mean, she did not want to have any debt just because she grew up in a large family where money was always tight. So she was always great about spending and helping me understand the value of money and balancing a checkbook and not getting into credit card debt. But she herself was not in a position to actually save for retirement probably until she was well into her mid-30s. And so I didn't really have like the influence, I should say, growing up to really talk to me about retirement savings and what that meant and tax benefits, just because she was playing catch up herself in terms of that as well. So I think that's also probably plays into it too.
And speaking of, there's a misconception about the money that we put away for retirement. And I know that there's a breadth of types of retirement plans, and I'm not even going to go into the specifics. But I am also aware of a misconception that you had that I'm going to bring up here on purpose.
Oh, boy. Okay.
Because it's not an unusual misconception.
Yes.
We're putting money away. We know that it's there. And in an ideal world, please, anyone who is listening, when you're changing positions and changing jobs, the company's best interest is the company's. So 9 times out of 10, they will encourage you to take your money as quickly as you can in the quickest way that you can. They're not going to spend a lot of time and effort saying you don't have to withdraw it. They don't care. They're paying administrative fees for an additional person who isn't an employee anymore. And you can't help but think, I got however much sitting here. I've got cash flow, differences that I need to make up for. I've got this that I'd love to pay off. This is ready money for me. And it's not.
Right.
And they don't do a good job of letting everyone know that. They're just incentivized to get it out as soon as possible.
Yes.
And I know from a pragmatic standpoint, no one takes the time to explain that it is a pain in the butt to manage that process.
Yeah.
The phone numbers, the emails, you do the form, they still do it wrong. It is, I actually want to use this platform as one of the platforms to say, it's never as simple as they say, it's not you, it's them, it's not you, it's them. But I recall on more than one occasion, as you have the opportunity to potentially take the money, I believe that you did once or twice because you had some cash flow needs.
I did. I would say didn't make the wisest decisions earlier in life. And you talk about lifing. One of, if I have to look back, one of the, I would say, not the best decision I made, but it was just what I had to do at the time, is I got married when I was young and had some cash flow issues. And so at the time, my company allowed you to take a loan against your 401k. And so did that several times, was able to pay it back. But unfortunately, when I left General Mills and I moved to my next company, the amount that I rolled over was lower because I had to take out some withdrawals just because of the financial situation I was in at the time.
This is a great place to highlight another thing that people don't understand about this. Like I said, where taxes meet human. So plans that do allow you to take loans.
Yes.
That is a nice stopgap that exists, and it's nice that it's there. We as accountants will probably go, oh, are you sure? Are you sure? But yeah, better to borrow from yourself and pay interest to yourself if you can.
Right.
But what people don't realize is it hits you in multiple ways. Now you're no longer contributing.
Right.
Because you can't contribute when you got a loan out. And the money that you had in there that is no longer there is not earning.
Right.
And we can't predict exactly what's going to happen. If it's time for a change or if they're doing layoffs, any loan that you have outstanding, you can't once you separate, that becomes a distribution.
Exactly.
And what people don't understand about a distribution from a retirement plan, every soundbite you see, 10% penalty, 10% penalty, 10% penalty. No one sees that other part of 10% penalty on top of the taxes you owe.
Right.
So even when you have the loan and you're like, I'll eventually pay it back, and that wasn't the scenario for you, or you're going, I'm going to a new job, I just need it for 60 days, I'll pay it back in, or I'm making up numbers, these aren't your numbers.
Right.
I have a $40,000 need, so I'm gonna take $40,000 out. That's actually 20. And no one,
they
hear the 10%. Well, I'll get a 10% haircut. No, 50%, because you got to pay taxes. Then the penalty, taxes, federal and state, and the penalty.
Yes.
So it's a triple whammy when you take money out of a retirement account more than anyone thinks. It's like I needed money and I didn't get as much as I needed, and then you do the return and go, oh, more, you got to be kidding me.
Yes. So I got caught with that, and then I went through a divorce about 13 years ago, and had to financially start over, really. So I whatever 401k savings I had from my first company were essentially gone, right? And so I had to go through paying the tax penalty over time with that. And then going through the divorce just kind of like set me back where I felt like I was starting over, which I literally was. And so, but by then, I was a little bit more educated on the implications, because you know, hopefully you learn when you make some bad decisions and not, keep making the same decisions. And so when that happened, I was just starting with Coca-Cola, and did everything I could to maximize my contributions and kind of basically try my best to build back up my retirement savings, and then started really thinking about investments and what my investment strategy was going to be. I had done other things like, gotten some whole life insurance policies, that could generate cash value if I needed it. Not trying to use that as an investment strategy, but that was one other vehicle I started going into at that time as well. And
now don't get me wrong, I have the CPA hat on, and I go, are you doing this? Are you kidding me? But in all fairness, and I think this is accurate, I also recognize lives.
Yes. Yeah.
So of the scenarios where you had to dip into those savings, would it be fair to say that sometimes you're like, sometimes you just got to do what you got to do, and sometimes it was a bad decision?
Yes.
I'm not saying that.
Yes.
So
yes.
So
it's fair. It's fair, because when you're dealing with the challenges that life throws you, people deal with it in different ways, and some people, and I'll acknowledge myself, sometimes because of how you're feeling emotionally, you make emotional decisions that end up being emotional financial decisions that are not the best decision for you to make, especially when you're creeping towards a deficit. But in that moment, you just want something to like distract you from whatever you're dealing with. And so, it was a combination. Some were bad financial decisions on my part from a spending standpoint, and sometimes it was legitimate. I was dealing with a hardship at that point in time where I had to do what you
and
had
listen,
to do.
I'm all about normalizing how do we make the best decisions we can make at the time, and how do we self-correct when we know we're doing something we're not supposed to do.
Right.
And saying that, you know that I don't know if you know this particular fact, but yes, I've got multiple letters behind my name. I am in this profession. I've been in this profession. We just calculated 34 years.
Yes.
I have bounced a check.
Oh no!
The horror. And as you can imagine, it was horrible for me. It was, oh my God.
I'm sure it was agonizing.
Of all people. And I've done it more than once.
Yeah.
So recognizing that having your financial life in order isn't an attempt for anything of perfection. It's how do you manage what you're going on in your choices and knowing those choices correctly.
Right.
And so the uneducation of people regarding sometimes the retirement stuff, I think is really important. So recently you had a cash flow need.
Yes.
And you knew not to do what you had done before. You're like, I'm not going to take the whole withdrawal.
Right.
You know, but it is a short-term need.
Yes.
So I assume you don't mind my saying what you asked me.
Yes, I don't mind.
Okay. And so I'm glad you asked.
Yes.
She called me and said, hey, I've got a need for, here's the amount. I said, so I'm going to go ahead and take the withdrawal and then turn around and put it back in, and this happened in January-ish. So I think you said, you know, September, October, I'll get my bonus, I'll put it back in, and I immediately go, wait, stop, hold it.
Right.
Because it doesn't work that way.
Right.
So the rules regarding even temporarily having access to fill a cash flow gap are way more complicated. So let's be clear, there is a law that you have 60 days to put it back.
Yes.
And it's an IRA, not your actual work, but an IRA. But the pragmatism in my entire 34 years of doing this, I've only seen it work twice. Twice. 60 days is a short time. The bonus doesn't come the day it was supposed to come, or it comes but it doesn't hit your bank account in time. You got to get it from the bank account back into the investment account, or your main banker is on vacation for whatever days, or we have a hurricane, or twice I've seen it happen. Once was me, and this is my job, and I literally made it on the 60th day, barely. Talk about stressed and crazy.
Right.
Okay, and you can imagine how I tried.
Right.
The other one was a financial investment professional who literally is way worse than me. Like, I almost had to call them as a client. I'm like, I am not tracking the penny. I don't freaking know where the penny is.
Right.
But theirs was on day number 59.
Right.
Because stuff happens.
Yeah.
So even using the law the way that is designed, where you can do a temporary cash flow need, you will see I will do almost anything I can to talk someone out of it.
Yeah.
Because 99.9% of the time, what it ends up being is a Form 1099-R on your tax return that next year as an early withdrawal and the penalty.
Yes.
So I did go, wait, stop, hold it.
Yeah, definitely. And even being wiser, I would say the last, I'd say 10, 15 years, you know, I would say it took me about 4 years after my divorce to kind of rebuild financially, and was doing pretty well, even became an entrepreneur. So right before the pandemic, I had an opportunity to start my own consulting business in 2019, which you helped me walk through that whole process of setting up a small business, how to set up an LLC, doing that versus an S corp, and what are the benefits of that, and just kind of walking me through that whole process. And was an entrepreneur for 5 years, and that's what I was doing before I came to Chick-fil-A. And at the height of the business, it was doing very well. I mean, I had 10 or so subcontractors. I had 3 very well-seated clients. I'd say at the height of the business. One year, probably my best year, I had $2 million in revenue. Of course, that wasn't in my pocket, but so things were going very well. And then about 4 years ago, life happened again, and I had a family member that was in crisis that I needed to help, and the result of that support, that family member had an unplanned pregnancy. And out of that, I ended up providing support to them, and I have a daughter, and so
who is amazing, wonderful.
Who is amazing. So I ended up adopting, but the money that it took to support that family member and to go through the adoption process wiped out my liquid cash savings.
And I'm snickering and laughing because I'm on the receiving end of the phone call that is explaining, I get it, those are very valid, there's a reason why you're making those expenses, you got to do what you got to do, and no, they are not tax deductible.
Yes, exactly, which, was hard for me. So here you go again, like I'm on this great glide path, I really feel like I'm building back my financial wealth. You helped me a lot through being an entrepreneur. It's very different when you think about how you treat your taxes, right? Because when I'm getting paid on my invoices, my client's not deducting taxes.
I'm anal accountant here. I know I keep saying I'm the anti-accountant in some ways, an accountant you can understand, but some ways I am. I have notes. And I definitely, one of the things I wanted us to make sure we talked through was what it was like being an entrepreneur, and that what was the mind shift, and what were the things that you thought you knew, and then as we went through it, you're like, oh crap, I didn't understand it that way. It's a different way.
Absolutely.
And what was the hardest answer that you got from your CPA?
Okay. Yeah. So some of the things that were different for me, thinking about being an entrepreneur, is the biggest thing was being proactive and actually setting aside money every single time I got paid an invoice, setting aside money to go towards paying taxes, because I needed to do that myself. Whereas before, up until that point, I was just relying on my employer to withdraw all the taxes that they needed to take out based off of my withholding information. No, I had to do it this time. So that was the biggest pivot for me. The other piece was the decision whether to have employees versus subcontractors, and what are the pros and cons of that. So glad I didn't bring them on as employees, but you helped me to understand I should have myself as an employee of my own company, and that I needed to pay myself, and what were some of the tax benefits of that. Helping me understand payroll tax, right? What are the pros and cons of setting myself up as an employee, and then even putting myself on payroll versus just taking a distribution from the business to pay myself. So those were some great things that you helped educate me on being an entrepreneur. Speaking of the payroll piece, I actually, we went forth with the strategy to have me being an employee of my own company. I was the only employee. Everybody else was subcontractors and were on 1099.
Which, by the way, I did not do the payroll. That is very intentional. Right. We also talked about finding a specialist or someone who isn't going to do this piece for you, that piece for you, and knows their lane. And I knew that was not.
That was not your sweet
my
spot.
lane.
Yes, so you.
And we also talked about, finding. I was excited and happy that you were working with me, but also, if not, how do you find a fit for what you need?
Exactly.
But yes, the payroll conversation.
And you helped me. You helped me. Find a third party to actually manage my payroll process, and so that was going smoothly. I think after probably the maybe the second or third year, I was running the businesses, I think is when we switched me over to be an employee, and the payroll company was great. And then one day I get this very large check from the IRS, and I was saying, I was so tempted to cash it because it had 5 digits on the check, okay? And I said, oh, this is a nice little bonus, because I was being diligent at the time. I was paying my subcontractors on time. The payroll had been set up for me. I was setting aside money for my taxes or what have you. And we had just done my return, and I think it was a couple of months after I got the return, I get this nice check for about $25,000 from the government. And so, being that you trained me very well, I called you and I said, hey, got this check. Just want to make sure it's okay that I can cash it. And you were like, no, wait, let's see what's going on. And so, we did then, you helped do the investigation, send me a copy of the check, send it to you, deduced that it was something with the paperwork that the payroll company had provided, and they had done everything right.
They had done everything right.
But it was just a timing thing, but the government hadn't recognized it. And so I didn't cash the check that time. But guess what? A year later,
they sent it
again. And I said, okay, listen, this is the second time. They must really want me to have this money, okay?
Yeah, you weren't really very happy.
And I could really use it.
Me.
And you said, no, you can't cash that check. So that was the hardest answer you have ever given me. And to this day, I'm still
a little mad at me, aren't
you? A little mad about that,
yeah.
But I followed your instructions, because had I cashed that check, the implications of that
interest and penalties, because
it
was clearly what you owed.
Yes.
We are dealing with the bureaucracy, and sometimes your bureaucracy left and right hand don't talk to each other.
Exactly.
And I appreciate that you're still mad at me on that one.
Yes, I am. But,
and I especially can relate, because had it really been some real money, I would have partaken upon my going on vacation with you.
Right.
But as I've told people before, when it comes to ethics and everything else, $25,000 is nice, but it's not enough for me to do anything unethical.
Exactly.
The number's going to have to be a little higher.
Exactly.
But it's interesting that you bring that up. The way back when I recently did a newsletter, and the IRS has just rolled out no paper checks anymore, only direct deposits. And this is an exact example of why that concerns me significantly. Because the reason I knew that answer was because it's happened before. I didn't know what the problem was, but I knew to say don't cash it.
Yes.
Because we were not expecting that was not a refund that we were expecting.
Exactly.
And so that is a big concern, because no bureaucracy is perfect. There are going to be mistakes. And if it automatically gets deposited into a business owner's account or someone else's account, how do you send it back?
Yeah.
There's no bill to attach it to.
Yes.
You just hold on to it, and then you've cashed it, and now you're going to be charged interest and penalties when they find it later.
Right.
I mean, literally, it's not that it is frequent, but it is not uncommon that that's happened before.
Right.
So
Right.
that worries me.
Yes.
But sorry I gave you bad news.
That's okay. That's
Sorry,
all right. You kept me out of trouble. That's what's most important.
You were talking about your daughter.
Yes.
Who is she 3 now?
She's 3. Yes.
Oh my
3.
gosh.
Yes.
And you mentioned that you have an aging parent, of course.
Yes, I do.
And when we see all the sound bites everywhere all the time, you can't help but feel overwhelmed.
Yes.
By all the financial information, everything you're supposed to be doing, this and that and this and that. There's so much advice out there. No one can possibly know it all. But walk me through it, or think through, compared to how you said your parents, and they were divorced.
Yes.
Their money, personality, and strategies, the things that you've done right and wrong. What are you looking at for JoJo? What are some things that you're thinking about? Here's what I've done right, here's what I've done wrong when it comes to financial life. Have you thought through that yet? Like I know she's only 3. But.
I'm in the process of it. I think a couple of things that I've done is, as soon as she was born, I opened up a 529 plan for her, so I could just start putting money away for her for.
And so, just a second. Yes. So people who don't know what a 529 plan is, do you want to try and...
Maybe you should explain it, but the Georgia 529 plan, it's the kind of path to college. So it's a way for me to contribute it's post-tax dollars, but it's like an investment account. So it earns interest over time. I can contribute. I don't remember what the contribution the limits are, but I can contribute money every month, which I have on a reoccurring. I put $200 a month in for her, so I can.
And the reason it's a way to save in a tax favored way for college versus just putting money into an account is that as it's earning interest, dividends in the stock market, et cetera, those earnings aren't taxed. If it was in a regular investment account or a regular savings account, those get taxed each year, and so that is a drag on your returns. But this is a special permission to save in a tax deferred way. And the reason that Aisha mentioned that there is a limit and she can't remember what it is, and no one remembers what, I shouldn't say that. We try not to have to remember what the amounts are because they change depending on economics, administration, et cetera, but anything that's tax favored, there are many different ways to be tax favored, but anything that's tax favored is always going to have some sort of limit. That you got to jump through hoops to get tax favored stuff. And there's generally a threshold that you can't just put everything in. That the government couldn't function, or we couldn't drive on roads. But okay, so you started saving for a 529 plan.
Yes, so started doing that from the minute she was born. The other thing I did was I actually went to a state attorney and actually got my my paperwork in order, where I actually set up a trust. And so I set up a trust, put all my assets in the trust, and made my daughter the beneficiary of the trust, and set up like different distributions for other, people I might want to take care of, once my assets are liquidated. But that was another step I took, not only to make sure that I had a plan for her should anything happen to me while she's still a minor, but also making sure that from an estate planning perspective, I had things set up in the right way. And you helped educate me on the benefits of a trust versus a will, so things don't get caught up in probate and things like that. And so that's another big step that I've taken for my daughter when I think about financials as well.
Financials for her. Have you thought through, I'm going to oversimplify this, but money personalities. So there really is like literally a study of different types of money personalities and how they manage it. I've used the example of, you know how I am with ice cream.
Yeah. Oh, yeah.
I like it a little bit.
Yeah. Human vacuum.
Yes. A little bit. But because I know that ice cream should be its own separate food group, it should. I am also aware of what I should do, and I'm aware of my limitations. So Ben & Jerry's mint chocolate cookies, kind of my thing.
Yes.
Before it became popular, I would drive across town to get that ice cream.
Yes.
But everyone would go, well, why don't you just buy? No, I buy the pint, and then I eat the pint, and then I throw it away. If I buy a half gallon, not that they make that particular flavor, I'm going to eat the half gallon, and that will be bad. So I know financially it makes more sense to buy the bigger one and to parse it out. I know that, but my eating ice cream personality is such that that's not going to change. So accept who I am, buy the pint and toss it. Like literally the one time I put Ben & Jerry's in a cup, like I was going to eat it out the cup, my husband came in the room. He's like, what are you doing? I was like, well, he's like, you're just dirtying up dishes.
Right.
And since he's the one who does the dishes, he was like, just eat out the carton. I don't want to wash another dish. I tried to get mad, but he was right.
He was right. He was right.
So money personality is kind of the same way. There's some things that we eventually over time learn about ourselves and either accept and find mitigating ways to deal with that, or we try and change them. So thinking about your parents' money personality and yours, what is it you think that you want? Do you want her to be more like you? Do you think it's something different? What do you, like when you start thinking about things like eventually she's going to have an allowance? My dad took out taxes when I first started working for him. He paid me under the table and then said, here's your money, and took the tax. I was like, what the?
Yeah. That's probably why you're a tax accountant.
That could be. And anyone who knew my dad was like, yeah, that sounds like what Mr. Nash would do. Okay, go ahead. Sorry.
If I'm being perfectly transparent, I don't want my daughter to be like my mom or like me. Okay. I want her to be somewhere in between. My mom, just the conditions in which she grew up, money was always at a deficit. She was the oldest of 7 children, and it was just really tight growing up. So much so that my mom, while she was fiscally responsible, and I mean, this is a woman who would balance her checkbook every week down to the penny. And if a penny was missing, she was searching to find out where that penny was. And so that very constrained way of thinking about money had an adverse effect on me, believe it or not. Because if I asked her for $1, because I saw something that I wanted, I had to have a good explanation of what I needed that $1 for. If it wasn't good enough, and quite honestly, understanding now she just didn't have it, I wouldn't get it. Well, I translated that in my mind when I went to college. What do? They throw all these credit cards at college students. My mother explained to me what credit cards were, and she has a very interesting process on how she uses credit cards. My mother has an 850 credit score. She pays the balance off on her credit cards every month, but she has them organized by closing date because she uses it just to float her cash flow just on a 30-day basis, but she always pays them off. And so she told me about it, but I didn't really grasp that. So I went into college and I made a lot of mistakes.
The amount of discipline it would take and time.
Yeah, very disciplined. So I got into college and I made the mistake most college students do. Hey, you can have this credit card for whatever. And so I got out of college with credit card debt. And I've paid off credit card debt multiple times during the course of the last 30 years. But I think that real stringent mindset caused me to go the other way. And I developed this money attitude for a while of just like, well, now I'm in a position where if I want that, I can get it. I'm just going to go buy it. Whether I really had the cash for that or not. And so it took me a long time coming out of college and coming out of grad school to rein that in. And so it's reined in considerably, but every once in a while that personality peeks out every once in a while. And while I'm definitely more fiscally responsible, there's been some spending choices that I've made, even in the last 5 years that I haven't been wise. Again, getting back to depending on what's happening in your life and where you are emotionally, it can drive you to make you're not thinking about the financial implications. And so I also don't want my daughter to be in this like instant gratification mindset. I want her to have a balance. And so I think my focus for her is to educate her about money, but help her understand weighing the trade-offs between doing something now when you really don't have it versus just waiting a little bit. And if you just wait, then you won't have to deal with the implications later. And so that's really where I want to try to get her to understand the balance between the two.
So speaking of which, because we as a society don't talk money, which has its pros and its cons. It's personal, it's private, but that also means we don't learn when people are doing it well or learn when people are doing it poorly.
Yeah.
And so part of why I want to do this podcast and love doing it is for these reasons. Like, let's talk about it. Let's talk about these things.
Yeah.
How do we find the line between it's personal versus secret? Like, because we still need to talk about it.
Right.
As an executive, I'm going to term where you are and where a lot of people are is what I would call the upper middle class. Okay? No longer living check to check, but you can't stop working either.
Right.
And we think we're among our peers, and we sort of talk about stuff, but don't. And when it comes to tax law, there's nothing geared towards this this section of people. If you're the working poor, you know what what the laws are.
Yeah.
If you are the mega wealthy, you know what the laws are. If you're the working poor, you got a lobby working for you. If you're the mega wealthy, you got a lobby working for you. The upper middle class, you kind of don't have any sympathetic facts.
Right.
So nobody's passing tax law in your favor.
Right. That's true.
But that doesn't mean the financial struggles aren't real.
That's true.
You're trying to progress up.
Yeah.
So have you even do you have conversations with your peers, like work, and I'm saying that intentionally. I think most of us have gotten pretty good at not comparing ourselves to the Joneses.
Right.
Like, you're not worried about what Warren Buffett does, you know that.
Yeah.
But I suspect that you see your other executives next to you and you're wondering why you're not in the same space, what's going on. Talk me through with that. Do you all have those conversations?
Not really, to be honest with you. Not any direct conversations with coworkers where they really talk about money. I mean, the most of what I pick up is within an earshot. I'll hear about, somebody just bought a lake house on, Lake Oconee or things like that, and in my mind, I'm wondering, okay, well, what kind of financial choices have they made to afford them to be able to have a second home? Because I'm certainly not there. I'm grateful for the home that I have, but I'm certainly not there. And so, to be honest with you, no. I mean, unless it's, fortunate, that as long as we've known each other, that, I can have those conversations with you. But no, it's interesting how little discussion there is with other peers, especially in the workplace, that are in that same kind of upper tax bracket, directly having any of those direct conversations. So you just kind of pick up things in a peripheral. A perfect example too, I remember I was traveling somewhere and I was in the Sky Lounge at Delta, and I was getting ready to try to make some decisions about what type of health plan I was going to pick for the year, whether I was going to do a high deductible health plan with the HSA, or if I was just going to do our regular like PPO plan. And I heard these 3 or 4 guys, they must have worked together, talking about how they use the high deductible plan and talking about all this money that they just kind of
they're using it as a retirement plan.
They're using it as a retirement plan. Like one guy said he had $12,000 in his HSA account, and I'm thinking, how are you doing that? And not withdrawing from it because you get the triple tax benefit from it. And so even thinking about strategies like that, it doesn't work for me at this point, just having a young child. But just even like hearing that, you just, if you're paying attention, you pick up things through overhearing conversations, but those direct dialogue, conversations are not, I haven't experienced them in my circle.
That's helpful. And I think you've just given me another podcast topic that we're going to do, because working in the space that I've worked in, with the group of people that I've worked in, we do have insight into those details. And 9 times out of 10, comparing ourselves to our peers, they're not actually our peers, but we have no idea.
No clue. Yeah.
We have no idea that they are not our peers because their financial facts and tax facts are dramatically different. And actually going through a couple of examples, because you're absolutely right. HSAs are great if you're using it because you don't use it.
Right.
So it's actually a supplemental retirement plan. Because remember, we said earlier that anything that's tax preferred in any way, there are going to be limits and you got to jump through hoops.
Right.
They're also great if you do actually use and you need it. So because it's all pre-tax.
Right.
Of course, who knows when you're going to use those things.
Exactly.
But there are tons of things like the second house. They probably don't have student loans, or you might have student loans. You guys have the exact same position, and they might have their child in the same private school that you do, but you're paying for it. For them, their grandparent is exiting their estate and they're trying to push money out. They're paying for the
exactly.
So it's tons of things.
Or it's a dual income household. I am a single, divorced, mother.
Exactly.
And so, everything falls on me. And so I would say probably 75% of my peers are married. Right? And so they have dual income. Their children are a little older.
At the executive levels, the world that we live in, we would love it to be a different way, and we know what we all say, but the reality is still, even at those executive levels, that is still where you will more likely see the traditional households.
Right.
So they don't have childcare. Exactly. Even if they're married, the other spouse is staying home.
Exactly.
And childcare is more than a freaking mortgage in a lot of places.
Oh, absolutely. I'm grateful that I currently work for a company that offers great childcare benefits. And so that's definitely helped supplement the costs considerably. But yes, the monthly cost to have a child in daycare is at minimal a very high car payment, or if not a mortgage for a small house.
Mortgage or rent. There's a couple that I worked with them when we were talking about their finances, and they couldn't get over their credit card debt. And they kept, why do I have it? I said, you have it because you have young children. You're paying daycare with your money, and you're putting living expenses on your credit card. You don't want to, but because they were like, what are we spending it on? We're not wasting. It's like, no, but your groceries.
Yes.
Those things that normally wouldn't be now are.
Exactly.
So, all right.
Exactly.
So we're winding down. We're winding down. Thank
Okay.
you. Thank you. So you give me an idea for another podcast.
Okay, I'm glad I could help.
To discuss the realities of what it actually looks like besides in theory. And so as we're ending and rolling down, I want to do a couple of things.
Yes.
We talked about that you've been an entrepreneur, that you're now an executive, but part of tax law and financial wellness is, I believe you mentioned that you still are enjoying the entrepreneurial side, and you still do a few little consulting things here and there, right?
Yes, I do. So even though I'm back working for a company, my company, the Emerging Group, is still active. And so, again, my specialties are in supply chain strategy, but I also do a lot of program and project management as well. That's actually kind of one of my claims to fame, because I was a consultant for one of the Big Four earlier in my career. And so it's just a nice blend of having that supply chain functional expertise, but I also do project and program management as well.
Oh, my God.
So, yes.
And that's such a skill that is... I hate to say it, it's the pendulum is swinging, it's becoming out of favor because people don't recognize the value.
Oh, yeah.
But they recognize it when it's not there.
Exactly.
Like, I've trying to, it's like, have you ever called the help desk and the person you're talking to is like, the other person just told me the exact opposite?
Yeah.
That's because they don't have a project manager.
That's right.
Managers don't do anything. Oh, yes, they
do. Yes.
So that's good to know. Thank you. And it's the Emergent Group, right?
It's the Emergent Group, yeah.
The Emergent Group.
Yes.
And Aisha Steptoe.
Yes, that's right.
Steptoe.
Like step on my toe. Yeah, I got teased a lot.
Okay, I didn't know that.
Teased a lot in school.
And so my understanding about the way these podcasts normally should end, this is the part where we do the commercial.
Okay.
Like, hey, let's check in again.
Yes.
So the Tax Translator podcast, same time, same place. It's going to be every 2 weeks. In addition to checking out the podcast, it's a lot of our conversations are also based on a LinkedIn newsletter that I do that's also every 2 weeks called The Tax Translator.
Awesome.
And one of the things that I think is really important is for everyone to figure out how to have better conversations and discussions with their advisor.
Yes.
Talk to them. And what does that mean? Because you've been comfortable talking to me because we have a friendship.
Right.
And you're able to say to me sometimes, that's not what I asked.
Right.
We don't always feel that comfortable with other providers that we may not have that relationship with. And so the Accountant You Can Understand, actually there's a website, The Accountant You Can Understand, that'll have some checklists and processes of how do we improve these how do you get out of financial advisors and CPAs in a pragmatic way what you need. In addition to being correct, we got to get it right.
Right.
And in the midst of getting it right, how can we also help you? And how can we keep you out of trouble to the extent possible?
Exactly.
So thank you for your time today. Is there anything that I should have asked you that I didn't ask?
No, you did pretty good. You covered the bases. And,
I cover the bases.
Yeah, and I appreciate you. I think the tax translator is a great descriptor because you have definitely, I've always said that it takes a special person to really enjoy and love tax law. And so.
You're being nice on camera.
Yeah,
what you actually said was that I deserved a lobotomy.
Exactly. But it's helped me tremendously, and I'm just honored to have been your first guest. So.
Thank you. I appreciate it. And I love your being here. And I want, you said I need a lobotomy. My brother has said, like, you are the hippiest capitalist I have ever met. So what is wrong with you?
Yes.
And that's why I love the ability to talk to people about how this stuff matters.
Yes.
It matters to your everyday life. We try and put our head in the sand, but it matters.
It matters.
So thank you, Aisha Steptoe. I appreciate you spending the time with me today. Yes. And we have made it to the end of our inaugural podcast.
Yay.
Thank you so much. And you'll see us again in 2 weeks.
Yes. All right.
Thank you.
Thank you.